Ever wondered how the wealthy stay ahead in the financial game? Did you know that 90% of millionaires credit their success to specific money rules? It's not luck. It's a set of secret money rules they live by. And it's high time you learned what the rich know and the poor often overlook. Here are 9 money rules the rich don't want the poor to know. 1. Take advantage of time, not timing. The recent Dow Jones dip reminded us all that predicting the market's next move is like trying to read tea leaves. The wealthy get it. They're not playing the day trading game. As Peter Lazaroff, a seasoned financial planner, wisely puts it, time beats timing in the investment game. While many think timing the market is the golden ticket, the wealthy focus on the long game and the magic of compound returns. They know it's about patience and letting wealth grow over time. 2. Salary isn't always the whole story. Earning more doesn't always mean having more. Your salary is just one piece of the puzzle. Sure, it's nice to bring in a hefty paycheck, but it's not the whole story. See, what really matters is what you do with that money. Are you saving and investing wisely, or does it all vanish into daily expenses? The rich understand that it's not just about making more, but also about managing it smartly. In fact, climbing the corporate ladder will only get you so far. At some point, you reach your earning potential and plateau. The rich know that in order to grow wealth, it's important to make your money work hard for you, not the other way around. 3. Maintain a healthy balance between risk and reward. All right, here's another secret the rich swear by. It's all about finding that safe zone between risk and reward. Picture this. You're on a seesaw. On one end, you've got risk. On the other, reward. Now, if you're too heavy on one side, things can go topsy-turvy real quick. The temptation for most is to play it too safe and avoid any risk at all costs. It might keep you cozy in your comfort zone, but it won't lead to major financial gains. On the flip side, going all out, taking crazy risks without a safety net, well, that's just asking for trouble. The rich understand this balance. They're not afraid of taking calculated risks, but they do it with careful consideration. They diversify their investments and spread out their eggs in multiple baskets. They know that while some ventures may carry higher risk, others provide stability and consistent returns. Think of it like a buffet. You've got your safe, low-risk options like bonds and stable investments. Then you've got your higher risk, higher potential return options like stocks or ventures. The key is finding the right mix that aligns with your goals and risk tolerance. So here's the bottom line. Striking that balance between risk and reward is like steering a ship. You want to navigate those waters with confidence, not too timid, but not recklessly either. The rich know this, and it's one of their golden rules for building and safeguarding wealth. 4. Debt is for business, not people. The rich get that using debt strategically in a business can be a game changer, but for personal finances, not so much. Think about it this way. When you're running a business, taking on a calculated amount of debt can be a smart move. It's like giving your venture a little boost to expand, invest, and make even more money down the line. But when it comes to personal life, especially non-business expenses, the rich are all about keeping that debt to a minimum. They steer clear of high-interest loans or maxing out credit cards for non-essential stuff. Instead, they focus on saving and investing their hard-earned cash. Now, don't get me wrong, debt isn't automatically evil. Mortgages for a home, for instance, can be seen as an investment in your long-term stability. But it's all about making sure that any debt you take on is a calculated, strategic move, rather than a quick fix for a short-term desire. So remember this key rule: debt has its time and place. And in the world of personal finance, the rich play it smart and keep it minimal. They know it's all about building wealth steadily, not drowning in unnecessary debt. It's a game changer, my friend. 5. The best investment is you. The rich know that the best investment you can ever make is in yourself. It's like putting your money in a high-yield account that never stops growing. Think about it. The more you learn, grow, and develop, the more valuable you become. It's not just about the skills you acquire, but also about honing your mindset and expanding your horizons. This self-investment pays dividends in ways you can't even imagine. This is why the rich don't stop learning after school or college. They dive into books, courses, workshops, and seminars. They seek out mentors and coaches who can guide them through the twists and turns of the financial world. This continuous learning isn't a luxury, it's a strategic move that pays off big time. But it's not just about knowledge. Taking care of your physical and mental well-being is a crucial investment. It's like the foundation of a sturdy financial house. Regular exercise, a balanced diet, and practices like mindfulness and meditation all contribute to your overall wealth, both in health and in wealth. You are your best asset. The more you invest in yourself, the greater your returns. The rich know this, and now you do too. It's time to put yourself at the top of your investment portfolio. 6. Money is a game of numbers. You know what's wild? Money, my friend, is like a game of numbers. And guess what? The secret sauce to going from flat broke to rolling in the cash, it's knowing how to double up. Seriously, think about it. Can you take $500 and turn it into a cool grand? It's not just about luck, it's a skill. Now here's the kicker. Some folks, when they get a bit of cash, they blow it all on whatever catches their eye. But here's the truth. If you can't double or tenor your 20, you won't magically double $1 million when it lands in your lap. So what's your money double up score? The rich, they didn't get there by chance. Nope, they learned the ins and outs of this money game. And guess what? You can too. It's called financial smarts, and it's not something they teach in school. You gotta go out there, read up on personal finance, maybe grab a mentor or a course, and soak up all that money game knowledge. Trust me, it's a game changer. 7. It's not just about what you know, but who you know. Picture this. You've got this killer idea for a business or investment, right? Now, imagine having a crew of like-minded folks who not only get what you're doing, but are also fired up about it. That's your social circle, and trust me, it's a game changer in the world of building wealth. Here's the deal. The rich understand that surrounding themselves with the right people can open doors you don't even know existed. It's like having your own personal cheer squad of supporters, mentors, and potential collaborators. Let's say you're into real estate. Having friends or acquaintances who are in the industry can be a goldmine of advice, tips, and even potential partnerships. They've been in the trenches, faced the challenges, and can offer insights that textbooks just can't. And let's not forget about networking events. Sure, they might sound a bit formal, but think of them as treasure troves of opportunity. You're not just shaking hands and passing out business cards, you're connecting with potential allies who might just be the missing piece in your financial puzzle. Building strong relationships, seeking out mentors, and surrounding yourself with like-minded individuals can catapult your success. Your network can open doors, provide invaluable advice, and even lead to lucrative opportunities you might never find on your own. So whether it's joining professional groups, attending meetups, or even just having regular coffee catch-ups with your entrepreneurial pals, your social circle is a secret weapon in the world of wealth building. Remember, it's not just about what you know, but also who you know. 8. Understand the things that make you richer and the things that make you poorer. You need to get real cozy with what's boosting your bank account and what's draining it. The rich know exactly what moves the needle in the right direction and what's just bleeding cash. To do this effectively, you should know the difference between assets and liabilities like the back of your hand. Assets are like your financial sidekicks. They put money in your pocket. Think investments, real estate, or a business that's churning out cash. Liabilities, on the other hand, well, they're like the sneaky culprits that swipe money right out of your wallet. We're talking about things that cost you, like loans, credit card debt, or high-maintenance stuff that doesn't bring in cash. The rich are all about piling up assets and minimizing liabilities. It's like a seesaw. They want that asset side to be nice and heavy. This strategy sets them up for financial success. So next time you're eyeing a purchase, ask yourself, is this an asset or a liability? 9. Money doesn't like being idle. Rich people think of money like an active friend because they know that if you leave it sitting around doing nothing, it might just wander off to someone who knows how to put it to work. Money doesn't like being idle. It wants to be out there, hustling for you, not just lazy in your pocket or bank. So invest it into something. Put it to good use. And with investing, you need to invest early and invest often. Imagine this. You've got two friends, Sarah and Mike. Sarah starts investing a small portion of her paycheck in her early 20s, while Mike decides to wait until his 40s. Fast forward a couple of decades, and guess who's sitting on a tidy sum? You got it, Sarah. Time is the ultimate ally when it comes to investing. As Warren Buffett once said, the best time to plant a tree was 20 years ago. The second best time is now. What are you waiting for? Start planting. If you found this insightful, don't miss out on more valuable tips. Hit that subscribe button. Which money rule resonates with you the most? Let us know in the comments below.